Portfolio Builder members, another winning trade. In fact, we haven't lost money on the SPY trade all year. Let's talk about what we did and how much this adds up to in terms of a return if we do this over and over and over again, 3 times a week, 52 weeks a year. So Friday, we sold to open the April 15th, 2019 290 call option, and we collected a credit of 83 cents per share we own. So that works out to 100 shares per option contract. That means for every 100 shares of the SPY ETF you own, you have the right to sell one option contract. In this portfolio, we're using a $500,000 portfolio. However, you might be only using 100 shares as a minimum. And in a minute, I'll tell you how you can double that result using Robinhood app, who has free commissions on everything in our strategy, which really helps increase your profit margin with this strategy. And they'll let you have a 1-to-1 margin. So you could actually, if you had $30,000, be trading a $60,000 account, which essentially would double the results we're talking about. So we collected 83 cents per share credit to our account. And today we were able to cover that for 33 cents. So we made a profit of 50 cents or $50 per contract on the covered call. So that's a huge return over time. But let's look at what happened to the underlying. So the underlying, which is a unrealized P&L, went from 290.14 and dropped slightly this morning when I covered it to 289.82. Now again, we don't really care what the SPY is doing from day to day. It's more like we've invested long term in the SPY, and we plan to rent it out to speculators over and over and over again for the rest of our lives. This is the safest way to generate retirement income. But if we do look at the unrealized loss on the underlying, let's see what kind of return we have just net out of this entire sequence of trades from Friday until Monday. And let's see what kind of profit that would generate over the course of a year. So as you can see, we had a 50-cent profit realized on the covered call. However, our SPY shares did drop in value by 32 cents. Now that's not a realized loss. It's just sitting there and allows us to repeat this trade today. So the net profit was $18 a contract. And you can see if you're using Robinhood app, all that profit is yours. If you use any other broker dealer, you're giving up a lot of your profits to the broker for no reason. So this is a net profit of 6 basis points on this particular trade. And when we look at the return, if you do this 156 times a year, it's a 9.8% return. Now use the margin that Robinhood gives you. Now you're sitting on an 18% return. So it really adds up. This is the way to be the casino instead of the gambler. Now let's look at today's trade. It's exactly the same, just push the expiration. April 17th, 290 strike. You get to write one covered call per 100 shares you own. And again, if you use Robinhood app, you can actually get 1-to-1 margin and double that. So collect twice the money with the same capital. As far as why we've chose the 290 strike, the market is really undecided. The trading volume is relatively even in the puts and the calls. And so we've just went right at the money to collect the 290 strike. Now in our actual trade, we collected 86 cents. And if I switch over to our track record, you can see we are now sitting on a 7.15% return since December 12th, 2018 when we launched this. It did survive the Christmas massacre and has just been slowly piling on profits day after day. This is a strategy that works in all market conditions. It may miss out on some of the growth, but it also protects your capital against downside risk. And for our clients who are usually 55 to 80 years old, you've entered a period of your life where protection is more important than growth. So this allows you to have a consistent return over and over and over again with a very quick and easy trade that puts your money into a very diversified product. You have exposure to the top 500 companies in America by owning the SPY. Now we did issue a new spreadsheet So everybody can look in their inbox for this, and you can see we've made it even easier. So now when we think the market's going to go down, besides writing our covered call to protect our capital, we can actually put a little capital into the Inverse Tech and the VIX ETN. So we're not in a position in the market where we'd want to do that right now, but that time may come. And also we've switched to just buying and holding the TBT. So whenever I have profits I don't need to spend on retirement costs, any extra cash, we're just sitting on the TBT. And if I scroll over here, again, the way to launch your spreadsheet is put your deposit into this blue area with whichever amount of capital you want to put into the program. And if you do intend to use the 2-to-1 margin with Robinhood, then you would simply put double what you're really going to deposit, set your target setting to 90 to 95% right here in the green area, 5 to 10% in the TBT. If you don't intend to spend all the cash flow you're generating, or if you would like to skip out on the TBT so you always have that cash cushion, you could always put your 10% in the cash. We store the covered call trade up here, and then we cover it down here. Now for more advanced strategies, we do have some long options, but I don't intend to use that in our basic program. When we need to protect our capital more so than the covered call already offers, we'll simply go through a little allocation into the inverse ETFs and take a little capital out of our SPY. So that way we can start to hedge a little more aggressively than we do just with the covered call. In fact, we can generate a very nice return with these two ETFs during market volatility. And also during market volatility, the option premium for selling covered calls will skyrocket up. So our strategy is very, very good for dealing with volatile markets. So thanks again for your time. At 1 Eastern, we're hosting a live webinar where I'm going to present some more information that was not covered in this video about what's going on in the markets, open up for Q&A, and even demo how to use the platform from scratch. So don't miss the webinar, and if you haven't yet, go to Robinhood, click the link from our email, and you can get a free stock plus get free commissions on every last little part of our strategy. As well, I do want to mention that if you reply to our email with your phone number, we will add you to our text message broadcast list, which helps you get the alerts very timely and also gives us the opportunity to send you emergency alerts if anything out of the norm happens in the markets. So thanks again for your time. Look for the new Trade Alert video this Wednesday and a webinar coming up at 1 Eastern.